Hello, stock market enthusiasts. Now let's discuss about most interesting topic: FII selling versus DII buying. Who is actually right? Foreign investors are selling Indian equities. Domestic investors are buying very aggressively. So the big question is, who is actually right? The answer is not emotional, but very structural. Let's start with FIIs. FIIs don't look at India in isolation. They look at relatively a global opportunity. When US bond yields rise, the dollar strengthens or global risk appetite weakens. FIIs pull money from emerging markets, even stronger ones like India. This selling is not a verdict on India's growth. This is an asset allocation and not a panic. You know, FIIs are highly sensitive to the currency moves. A weaker rupee, higher hedging costs, or global uncertainty forces them to reduce exposure. Now, let's understand the DIIs. DIIs like mutual funds, insurance companies, pension funds are buying India because India's domestic fundamentals are very much intact. SIP flows remain very strong. Household financialization is rising. Corporate balance sheets are healthier. Credit growth is stable. DIIs are not trading quarterly macros. They are investing for India's next to 5 to 10 years. So the question is, who is right? In the short term, FIs can be right on the price direction. In the long term, DIs are usually right on the wealth creation. So this divergence is actually very healthy. It reduces India's dependence on foreign capital and makes markets more resilient. And now the most important question for investors are: should you panic when FIIs sell? Answer is absolutely no. The history shows that some of the best wealth creation periods in India happened when FIIs were cautious and domestic investors stayed invested. FIIs eventually return when the growth visibility improves and global conditions stabilize. By then, the prices already must have risen much higher. That is why staying invested during these uncertain times matters a lot. Markets reward patience, not prediction. So corrections are driven by FII selling are very temporary, and India's growth is very structural and very much intact. Wealth is created by remaining invested, and headlines are uncomfortable when not when the market are universal. Confidence is universal, so FII chase liquidity, DIIs compound it patiently. So, and in critical phases like this, patient capital usually wins. So, if you find this video interesting and intriguing, hit the like and subscribe button. Have a super Elysian day.